Hey everyone, welcome back to Corporate Decoder, your go-to for turning boring corporate speak into juicy insights. And today we're looking at Dollar Tree Inc. And let's just say things are getting a little more, well, pricey before we dive in. If you are all about cutting through the corporate jargon to find what really matters, make sure you hit that subscribe button. And for those who love an even deeper dive and a great community to discuss all things finance, our Discord server link is in the description below. Don't miss out. So Dollar Tree Inc. has just dropped some news that might make you wonder about their borrowing habits. They've essentially decided to up their ante on what they can borrow through something called commercial paper. Now, commercial paper might sound fancy, but it is basically a short-term loan that companies use to cover their everyday expenses or fund their operations, kind of like a company credit card, but for huge amounts of money. What this means is they've increased the maximum amount they can have out at any one time from $1.5 billion to a whopping $2.5 billion. Think about that for a second. That is an extra $1 billion they're now able to borrow for short periods. Why would a company do this? Well, it usually suggests they anticipate needing more cash to manage their business, whether that is for inventory, expansion, or to cover upcoming payments. It's a sign they're confident they can manage this debt, but it also means they're leveraging their ability to borrow more. Now, here is a little detail that gives us a time frame. This increased borrowing limit is in place until March of 2026, which is when something called their 364-day facility matures. After that date, the limit will drop back down to the original $1.5 billion. So this isn't a permanent increase, but rather a significant temporary boost in their borrowing power. It is like saying, we might need a bit more room for a while. It is also important to note that these notes, these commercial papers, are not registered under the Securities Act. This is pretty standard for this type of short-term borrowing for large established companies. It means they're not being offered to the general public in the same way stocks are. They're generally bought by other financial institutions. So this isn't directly impacting you as a shareholder in terms of buying these notes, but it does reflect the company's financial strategy and its access to capital markets. Now, let's talk about what this all means for Dollar Tree. On the surface, increasing borrowing capacity can be seen as a sign of growth and confidence. They believe they can handle more debt and that the investment of that borrowed money will generate returns. This could be to fund more stores, to buy more inventory as demand potentially increases, or perhaps to manage cash flow more efficiently during periods of expansion. However, it is always wise to look at this with a critical eye. While Dollar Tree has a strong brand and a loyal customer base, especially in the discount retail space, they operate in a competitive environment. Rising costs for goods, labor, and transportation can put pressure on their margins. By increasing their short-term debt, they're essentially betting that their revenue and profit will keep pace or even outpace the cost of borrowing. If sales falter or if their costs spike unexpectedly, having a larger debt load could become a burden. Think of it this way, if you are a small business owner and you decide to take out a larger loan for new equipment, you are doing it because you expect to sell more products and make more profit with that equipment to pay off the loan. If you don't sell as much as you hoped, or if the cost to run that new equipment is higher than you thought, you are still stuck with that loan payment. Dollar Tree is making a similar calculation, but on a multi-billion-dollar scale. We don't have specific financial tables in this particular filing, so we can't dissect revenue or profit numbers right here. But the decision to increase their commercial paper program is a significant financial move that whispers about their immediate cash needs and future outlook. It suggests they're looking to have financial flexibility. So, what is the verdict on Dollar Tree's recent financial maneuver? On one hand, it shows ambition and a proactive approach to funding potential growth opportunities. They're signaling that they have access to significant capital and are ready to deploy it. On the other hand, it inherently carries increased financial risk. The company is taking on more debt, and its success hinges on its ability to generate sufficient returns to service that debt. We haven't seen any major red flags in terms of financial distress, but it is a point to monitor closely in their future filings. Essentially, Dollar Tree is gearing up potentially for a big push, and they're ready to borrow to get there. It is a calculated gamble, and investors will be watching to see if that extra liquidity translates into tangible growth and profitability. Alright, that is our breakdown of Dollar Tree's latest announcement. What is your take on this increased borrowing? Do you see it as a positive sign of growth or a potential warning sign? Drop your thoughts in the comments below. If you found this deconstructive analysis helpful, please give us a thumbs up and subscribe for more regular insights. And don't forget to join our community on Discord, linked in the description. Thanks for watching, and we'll see you in the next video.